Welcome back to the Deep Dive. Today, we are jumping into one of the most unpredictable assets in finance. We're talking about Dogecoin. And specifically, we're looking at the start of 2026. Our sources are painting this picture of a really dramatic turning point after what was, let's be honest, a brutal 2025.
Brutal is the right word. We're in January 2026, and the whole market is still, nursing its wounds from last year. Dogecoin saw drawdowns of over 70%.
70.
Yeah, a massive correction. But what's so fascinating is that the start of this year isn't about looking back. It's about these new kind of unexpected dramas that are popping up almost immediately.
Okay, let's unpack this, because you can't talk about Dogecoin without talking about its completely wild origin story.
Right.
It was created back in 2013 by two engineers, Billy Marcus and Jackson Palmer, and it literally started as a joke, a parody of Bitcoin.
And it was based on that Shiba Inu meme, the one that was everywhere.
Exactly.
It's just the ultimate example of a cultural artifact that accidentally became a financial one. It went way beyond satire, and it, became this global social thing.
And the sources really stress that its volatility and its resilience, weirdly enough, is all tied to that legacy.
It is. It never relied on pure utility. It relied on celebrity, especially people like Elon Musk calling it the coin of the people.
So if we connect this to the bigger picture, our mission today is to cut through that noise. We need to pull out the key metrics, the hard data behind this Q1 rebound.
And the drivers. What's actually moving the needle?
Yes, what is moving the market? Because a 70% drop followed by a 30% rally.
Yeah.
Something big is going on. So we're going to get into the data, the institutional moves, and even some academic takes on Doge.
All while trying to avoid the to-the-moon hype.
Exactly.
And that initial snapshot is really why we have to do this. After that devastating 2025, Dogecoin kicks off 2026 with this 30% rebound in just the first few days of January.
It's a huge show of force.
It really is. It shows that even for a meme, there's a serious mechanism for price action when the right things line up.
So let's get into that hard data. It's early January. After that big 30% spike, what does the market look like right now? Did that momentum just fizzle out?
It's surprisingly resilient, actually. The key word our sources are using is stabilization. Doge is kind of hovering around that 14-cent mark.
Okay, so it found a floor.
It seems to have. The market snapshots show it's fighting to hold ground somewhere between, about 13.5 cents and just over 14.5 cents. It's holding that line. That's critical.
And what about the very recent moves, the last day or so?
In the last 24 hours, there's been a small dip, about 2% down. But that's just normal market noise.
Right.
If you zoom out just a little bit to the full week, it's still holding a modest gain of 5%.
And the market cap, that's the real measure of its weight, isn't it?
It is. And it's sitting steady at roughly $20 billion. For a coin that survived that kind of correction to still be in the top 10 with a $20 billion valuation, that speaks to a very dedicated investor base.
That stability is interesting, but like you said, it doesn't just appear from nowhere, especially after that kind of a storm. So what were the triggers? What did the sources identify as the big institutional push that caused that initial jump?
The answer is 100% in the institutional world. And it all comes down to the gateway to traditional finance. Exchange-traded funds, ETFs.
Ah, okay. ETFs.
Yes. The sources flag a major new development. A company called 21 Shares, a big institutional player, just announced a new Doge ETF, and it's scheduled to list on NASDAQ this week.
Wow, this week. That's huge for legitimacy. And 21 Shares isn't the first, are they?
Not at all. And that's the key. This is a whole ecosystem developing. Grayscale already has their version. The ticker is GDOG. And Bitwise has one called BWOW.
So what we're seeing is a deliberate kind of coordinated move by these big financial firms.
Exactly. They're building regulated on-ramps for Dogecoin.
So for you listening, what does that actually mean? Having all these products from Grayscale, Bitwise, and now 21 Shares,
Right.
What does that imply for Dogecoin's health?
It implies a huge shift, a shift away from being just for retail speculators.
Right.
When you have a whole suite of regulated ETFs, you're basically opening the door for massive institutional investment. We're talking pension funds, wealth managers, corporate treasuries.
All the players who couldn't or wouldn't touch a volatile crypto asset directly before.
Precisely. And the sources make a direct comparison to the Bitcoin ETF that launched back in 2024. Those fundamentally changed the game for Bitcoin. They created a price floor the market had never really seen before.
Okay, so we have the institutional money pouring in, which adds this layer of legitimacy. But Doge has always been a social creature, you know? So we need to look beyond the suits and the money. What's happening with the community? The sentiment?
And this is where the story gets really, really interesting. You just can't analyze this thing through a purely financial lens. There's actually academic backing for why it's so resilient.
Academic backing for Dogecoin.
Believe it or not, yes. A big study from the University of Cambridge on cryptocurrency market dynamics highlights that coins rooted in culture, like Doge, they thrive on two specific things: high liquidity and strong social sentiment.
So high liquidity and strong social sentiment.
Yeah.
What does that look like in the real world outside of a university paper?
It means people are trading and people are talking a lot.
Okay.
And the data confirms it, the liquidity part. Transactional volume has surged 87% during peak hours. That's an incredible number.
87%.
It's astounding, and it directly validates what Cambridge was talking about. Then on the social side, the conversation on X, formerly Twitter, is described as being at a fever pitch.
So the community is fired up.
Completely. We're seeing these big movements with posts about the dog that bites Wall Street and this whole narrative around a V-shaped recovery. The community is all in.
So it's this perfect feedback loop. The institutional money creates a price floor, which gets the social media community excited, which then drives up the transaction volume.
Which the academics say is the key to the coin's stability.
Exactly.
Yeah.
The meme is literally a self-fulfilling prophecy of market engagement.
But okay, beyond the community and the institutions, what about the cold, hard charts? The technical analysis. Are the indicators confirming this is a real shift, or is it just a temporary bounce?
For the chart watchers out there, the signals are pretty positive for now. We're seeing analysis from places like Seeking Alpha that indicates Doge has broken through several key resistance levels.
And that's important because...
Well, when an asset smashes through resistance after months and months of a steep decline, which is what 2025 was, it's a very strong technical sign of a reversal.
So it means the sellers are finally exhausted. Right, and it signals that a sustained bullish trend could be emerging, at least for the short term.
Okay, so institutions are in, the community's fired up, technicals are looking green. Let's look forward. What are the realistic scenarios for the rest of Q1? What are the analysts saying is the floor, and what's the ceiling?
The forecasts are, maybe unsurprisingly, split right down the middle. It just reflects how volatile this thing is.
So what's the pessimistic take?
The pessimistic view, coming from analysts at places like Fool.com, they're warning that this recovery is fragile. They predict a possible slide back down to the 10-cent range.
Ouch.
Yeah. And that would happen if the broader crypto market has a sharp correction, or if all this ETF excitement just kind of wears off. So that's your potential floor, 10 cents.
And on the other side, what's the ceiling that the optimists are hoping for?
The optimistic view from firms like A-Invest, they suggest there's potential for a much bigger rebound, but there's a huge caveat.
Always is.
They believe a new high could be hit, maybe pushing up towards 23 cents if, and it's a big if, the price can break and hold that line consistently. And that depends entirely on more institutional money flowing in from these new ETFs.
So the institutions are really the key to any major jump. But there's a critical catch our sources point out about short-term momentum, right? It seems like the average person hasn't quite come back yet.
That is the single most important limiting factor right now. Despite the institutional buzz and the social media chatter from the core community, general retail demand is still pretty low.
Interesting. And
analysts believe that's what's capping the immediate upside. Without that big wave of individual investors piling back in, the short-term ceiling is probably stuck around 14.5 cents.
Which means we might just hover in this zone for a while.
It's very possible, longer than the optimists would hope, anyway.
We have to address the elephant in the room. Dogecoin is synonymous with one phrase, to the moon. What does the analysis say about the symbolic $1 mark? Is that even in the realm of possibility for 2026?
So, a platform called Trading Key gives a pretty measured take on this. They call reaching $1 highly speculative.
No surprise there.
Right. They acknowledge it's technically possible, but only with continued, very high-profile public support from someone like Elon Musk. It's a narrative-driven target.
Not a data-driven one.
Exactly. It's not based on fundamentals or even this initial institutional push. It requires the community and the influencers to keep this energy up basically forever.
And this raises a really important question. Any responsible deep dive has to talk about the challenges, the risks. So what are the big hurdles for a $20 billion asset that, again, started as a joke.
The sources are crystal clear on this. The number one challenge is volatility.
Of course.
Dogecoin is just hypersensitive to market shifts. Any turbulence, big or small, could easily trigger a collapse, potentially adding another zero to its price in the wrong direction.
Which really speaks to the fact that there are no fundamental anchors in its ecosystem.
Precisely. And that lack of anchors makes it vulnerable to everything else. First, regulation.
Right, the SEC.
The SEC approved these ETFs, which is a victory. But they are scrutinizing the entire crypto space very, very closely. Any sudden regulatory change could just pull the rug out from under this market instantly.
And what about competition? It can't be the only meme coin out there.
Not even close. The pressure from rivals like Shiba Inu is constant. They're all fighting for the same pool of speculative money and, more importantly, the same community attention span.
So if a new, shinier meme coin comes along.
Dogecoin's social engine could just stall out.
And then there's the dependence on single individuals. I mean, when you have a $20 billion asset that hangs on the tweets of one billionaire, that's a massive systemic risk.
It's the central paradox of Dogecoin. The sources flag this influencer dependency as a huge structural weakness. Elon Musk's support can send it soaring.
But one bad tweet
Could send it crashing. The entire ecosystem is vulnerable to that one single point of sentiment failure.
And finally, there's the long-term challenge of adoption. It has to become more than just a way to tip someone on social media.
That's the end game. And what's interesting is that the Harvard Business Review, in a paper on crypto economics, actually says that memes do drive initial mass adoption. They create these powerful network effects.
But those effects have to lead somewhere.
They have to eventually be backed by real-world utility to be sustainable. Until that happens, the risk remains incredibly high. It's like the Journal of Risk and Financial Management warns about crypto. You have to look past the hype and see the very real, very concentrated dependency risks.
It's so important for you, the listener, to understand that you're not buying a stock. You're buying into a social movement that is trying to become a financial asset.
And that tension is what makes it so fascinating to analyze.
So to recap our deep dive for you, Dogecoin in Q1 2026 is showing this remarkable resilience. It's stabilizing around 14 cents after a terrible 2025.
And this comeback is being driven by these huge institutional forces, the new 21 shares ETF, plus the ones from Grayscale and Bitwise.
Right, and it's also being driven by an incredibly active social community that's generating high liquidity. However, the coin is still fundamentally volatile.
And it's structurally dependent on key influencers and facing real limits on its short-term growth because retail demand just isn't there yet.
The core conflict we've seen in the sources is this combination of, well, fun and culture with the potential for real market value.
Exactly. The sources make it clear it is not a sure bet. But the early 2026 data shows this joke has real staying power. As long as that institutional support keeps flowing and the social engine keeps running, it is a high-stakes cultural experiment with a $20 billion price tag.
Dogecoin has survived a whole decade as a joke that just refused to die. Now, with these major financial players launching institutional products like ETFs, the real question that's left is, does this institutional acceptance finally legitimize the social hype and give it a permanent place in the financial system?
Or does it just add high-octane rocket fuel to an already volatile, meme-driven fire?
What do you think? We encourage you to dig into the sources and analyze that tension for yourself. That's it for this deep dive. We'll see you next time.